Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Bell. I'm your host, Nickey Mirchandani. Well, markets look set to put up a tough fight against the bears. Key question, will the market be able to snap the sharpest losing streak that we've seen in 4 years? SGX Nifty futures indicate somewhat a flattish to positive opening coming in for the broader index in India ahead of the macroeconomic data. Asian shares too edge higher, tracking small gains on Wall Street. US market ekes out slight gain on bargain hunting. In terms of FIIs and DIIs, the trend remains similar. FIIs sold shares to an extent of around 2022 odd crore and DIIs have bought in shares worth around 2231 crore on Feb 27. Back home also, MSCI Global Standard Index readjustment or the rebalance is effective today. Well, with that, let us get going and discuss some stocks and strategies today with Hemen Kapadia from KR Choksey. Hemen, good morning. I'm going to start off by asking you about the Nifty levels. You think now Nifty would be able to snap the sharpest losing streak in 4 years, especially since it's briefly touched that budget days low in previous session?
A very good morning to you, Nickey. Thank you for having me on the show. Well, I agree with what you're saying. We are set for a small reversal. If you look at the setup yesterday, some of the oscillators on the hourly charts are showing signs of a revival. We've taken support at 17,300. VIX is below 14. Bank Nifty is showing relative strength. Dow Jones is bouncing back. Dollar index is taking a small breather. And we are oversold at supports and a whole bunch of stocks, even something like a Reliance Industries is oversold. So frankly speaking, yes, I believe if not yesterday, today, max tomorrow, but in one of these three trading sessions, Nickey, markets are set for at least a small reversal. And yes, snap the sharpest decline in the last 4 years. Yes, we are on the anvil. I believe it might have happened yesterday. If it's not, it should happen today.
All right, what is the key support and resistance level that you would suggest right now for Nifty, and also your strategy on Bank Nifty, given that the entire week we'll see slew of macroeconomic data?
Okay. Firstly, there is support coming in at 17,226. We haven't come over there. Support below that comes at 17055. Resistance comes in at 17,430, 17,613. And at this point in time, maybe probably not needed, but 17,792. So we have these resistance levels coming in. Bank Nifty relative strength coming in. I'd say 40,500 is a level to watch out for. The spot Bank Nifty Nikkei has closed at 40,307. A close above 40,500 should open the doors for some sort of an upside. The intraday charts have posted a higher top, higher bottom. The daily chart has posted an upward key reversal. So there are first technical green shoots, at least some signs of a possible revival of sorts.
All right. Also, I'd like to chat about Zee Entertainment, right? We've seen the F&O, it's coming back in the F&O category, and also, there were a couple of developments that we'd like to address. But what do you make out of it? And would you suggest the viewers right now to get into that category when it comes to the F&O contracts?
I would say avoid. I think there is something else which is beyond what meets the eye. I mean, uh, the amount and the whole process seems a bit convoluted, and I think not exactly relevant. Yeah, but that sort of put paid and put C under 100% margin and whatever. So I'd say avoid it for the time being. Okay, having said that, the stock is continuing to post a lower top, lower bottom scenario, Nikki. 200 was important psychological as well as technical support. We are trading below that. Unless we come back and close about 200 to restore status quo, I believe the weakness hasn't gone away. Oversold, yes, but simply put, I'd prefer to stay away for the time being.
All right, Mr. Kapadia, if I could use this word right now, what looks interesting in the rather oversold markets right now? Any stocks that you think are near to that breakout levels, which could be a profitable bet for our viewers?
Breakout level, I'm not sure, but taking support at levels and giving a reversal in terms of profitable, Nikki, yes. I think one stock is Axis Bank. We've taken support at around 830. We are bouncing back. So one can buy Axis Bank at around 855 with a stop loss of 845 and a target of 865. There is also Max Financial Services, MFSL. Same logic applies. Upward key reversal coming in yesterday. Mechanical indicators on the early, 2 early, 3 early charts are showing signs of life. Uh, the stock looks set to appreciate further from here. So buy at 700. Stop loss of maybe this can be used even as an intraday trade or a couple of trading sessions, Nicky. Buy at 700. Stop loss 692. Target 716. So Axis Bank and Max Financial Services, two stocks which I think can sort of give you some sort of returns in a wobbly market.
All right, these are the two stocks that we'll be keeping an eye out on. But Mr. Kapadia, we're going to quickly go across and address the top movers of the day. Please stay on the sideline and let us know what looks interesting on the charts over and above the discussions we've had. First in the list, of course, like I mentioned, Zee Entertainment, that's on fast track. NCLAT has granted stay on NCLT order with respect to the IBC proceedings initiated against Zee. With this, Zee now moves out of IBC Framework, and F&O contracts with May 2023 expiry would be available for trading from today. Also, there is more pain coming in store for Adani Group of stocks. JP Morgan Chase and Company has wiped out Adani stocks from ESG portfolio. Major firms like BlackRock, Deutsche Bank, DSW Group continue to sit on Adani stakes right now, and the decisions of these fund managers are anchored by MSCI index. In total, the Bloomberg report suggests that 10 Adani stocks have lost around $150 market cap collectively since the Hindenburg findings. That's one key development we need to keep an eye out on. Apart from that, of course, MSCI Global Standard Index rejig is effective today. Nothing great comes out of it. There are two inclusions, one exclusion. Of course, we've spoken about Bank of Baroda being included and Biocon being excluded from the list. So that's going to be effective since today for that index. And India will see net outflow to an extent of around $30 to $40 million, which is not really significant, but just a marking point. Well, we are also tracking in slew of defensive names, Cipla for that matter. US FDA has inspected the Pithampur plant that we reported previously from Feb 17 to, just from the start of Feb 2nd to Feb 17 for that matter. It issued 8 observations, and these observations sometimes, also related to few of these things like failure to review any unexplained discrepancy procedures to prevent microbiological containment, which wasn't established, written, followed, and also there were problems across appropriate controls which were not exercised over computers or related systems. Well, another defensive counter that we'll keep an eye out will be Dr. Reddy. There is an acquisition out there, which most of the brokerages have come out of a report and suggested that, they've maintained the rating, and the target price for this one is around $5,099. It says that the U.S. generic acquisition is value accretive to nature and will bolster the company's U.S. portfolio. A few high valuation, low competition products basically will generate better returns in terms of the cash surplus. M&A remains an important integral part overall for the company's growth strategy. So that also will be one counter that most of the brokerages have covered this morning. So do keep an eye out on. Apart from that, we'll be looking at Wipro. Wipro is another bet. It's just recently announced a reorganization of service offering into 4 global business units. Now it's just realigning that. And what does this indicate? This basically indicates a sharp opening coming in on the focus and the strategy of the company. It also indicates doubling down on its investment plans, management bandwidths. Well, this is all that we have in terms of the key news that we'll be addressing. But Mr. Kapadia, I'm just going to quickly bring in and ask you about what do you make out of these developments, and what is your stance right now on Adani Group of stocks?
Well, frankly speaking, it's absolutely news-driven. One would have thought that the worst is behind us, but the lower circuits don't still seem to be stopping. Adani Port, which is, I think, the crown jewel of the company, that seems to have stabilized. Difficult to take a call on something like this, but I feel that it's being overdone. And frankly speaking, the accuser has not exactly covered its civil glory in the past. So I'd say stay away till stability comes in. And the first stock that I would pick would be Adani Ports. But I mean, till we don't see sanity prevail, which I am still surprised it hasn't come in, because you would expect action in FNO stocks. Adani Enterprise and Adani Ports are in FNO. You would expect the other stocks to sort of cool off and more action would be there in Adani in the FNO segment in the stocks. But that's not happened. So I'd say wait just a wee bit. Look to buy Adani Ports whenever possible at support levels, or when you think the valuations get more attractive. But once again, choppy market times like this, I would say don't go the whole hog. You can sort of spread your purchases, not buy all at the same time.
All right, spread your purchases across for this one. That's probably the word coming in from Mr. Kapadia. But also, what do you make out of the defense counters? We spoke about Cipla, we spoke about Dr. Reddy's, we spoke about Wipro. What looks attractive on the chart?
Frankly speaking, Wipro has been underperforming for a long time, Nicky, if you look at charts. And our entire IT pack has been riding piggyback on the NASDAQ. Frankly speaking, it looks more like a recovery. I still don't think it quantifies as a rally. They've had a wonderful run, but the overall technical setup isn't too copacetic for a very big upside. Some more recovery, yes, but coming back specifically to Wipro, it's sort of broken 395, which is a near-term support, which sort of puts a little bit of a question mark. We moved sideways for 5.5 months as far as Wipro is concerned, Nicky, and we haven't gained too much of ground. So if it doesn't do anything spectacular in the near term, or at least overcome 414 on the weekly chart, chances are that it might fall under its own weight. So not a very attractive scenario at the moment. Cipla continues to sink further. A simple analysis would be it moved from 355 to 1175 in the last couple of years. The whole move is over. It's unraveling, and I have a feeling for this whole calendar year, Cipla is not making a new high. So things don't look exactly great. Pharma per se, as a sector, is also not looking interesting. Aurobindo and Glenmark look to be slightly better spots. Coming back to Dr. Reddy, things are looking just a shade better, but we need a weekly or ideally a monthly close above 4610. That's when it would sort of break out from this 13-month range that it has been confined in.
All right, Mr. Kapadia, thank you so much for that view. But please do stay tuned in with us as we, quickly address the market opening, just to see the flavor and the texture of the market and the weakness that we've been witnessing for the last 7-odd sessions, 6-odd sessions. We've seen markets now coming in. Let's look at the opening now. 0.5% gone out there. We're looking at levels which is less than 17,400 mark for that matter. So clearly we're seeing some amount of losses again. So a positive start was really important in today's session, and it remains to be seen if we can break through to those levels, because the budget lows have been scaled. If you look at the bank Nifty index, let's see if that is spotting in any way. Just to understand the market texture right now, fortunately we're looking at somewhat flattish to positive start coming in for bank Nifty, although it's not that positive, but some amount of solace probably could be drawn out from a fact that the bank Nifty has kind of shown signs of recovery. If we can also look at defensive counters and the top gainers and the losers that we have on our list, we'd be able to pull out how numbers have. If we talk about broader index at this point of time, 0.2% on that one. Clearly we are looking at broader index probably participating into this. Broader index, small cap index also seems to be doing well. 0.3% gain out there. So clearly some amount of traction building in on bank Nifty, broader index for that matter. Although the sentiment somewhat remains to be negative even on the Nifty index right now, yet to be seen if it can recover, and we can see some amount of recovery coming in today's trade. We'll also look at the advanced declines ratio right now, 27 advance as well. We'll yet to see the updated numbers per se on the website, but right now what we're gathering is just a flattish trend coming in, at least for the Nifty out there. Bank Nifty showing some signs of recovery. Broader index probably participating. And let's also look at the top gainers on Nifty 50 index, the top gainers and the top losers that we have on our list. We'd be able to figure out if the market trend is suggesting of the auto counters. These are the ones which are probably in our list today. Bajaj Auto, M&M, Hero MotoCorp, all of them are participating, probably doing their bit in terms of the potential recovery. Tata Motors, Bajaj Finserv, Bajaj Finance. Okay, some amount of financial participation also coming in, but largely you're seeing auto stocks doing well ahead of the monthly sales data that would be coming in for the next month. But the review so far has been decent enough. But talk about the top losers, in that case, Adani Enterprises, Cipla, HCL Tech, these are the top losers. Cipla, like we addressed, there were 8 observations and there was no discrepancy found in those observation. Negative definitely coming in on Cipla. And Hindalco, ONGC, Titan, DRL, JSW Steel, these are some of the top losers that we have on our list for the day. But Mr. Kapadia, quickly come in on that one. What do you make out of auto stocks right now? Do you think there is further fuel to the rally?
As of now, even if we start with Bajaj Auto, Nickey, it had fallen off a cliff. Same with M&M. So frankly speaking, as of now, they seem more like recoveries. I think Tata Motors seems best structurally poised in the entire auto lot. But okay, coming back to M&M, 1390, 1250. So even if it goes back to 1310, it's still just a pullback and not a fresh rally. So no, I think it's just a flash in the pan. I wouldn't take it very seriously. Tata Motors looks good, especially above 440.
All right. So, and what do you also make out of these counters like Bajaj Finance? Because that is also one of the top gainers that we have on our list. Apart from slew of auto names like Bajaj Auto, M&M, Tata Motors, Hero MotoCorp, what about Bajaj Finance? What do you make out of it?
We've seen a 3.5-week decline after a nice jump from 5,600 to 60 or so, Nickey. So I guess short term, I don't see too much of a downside below 6,100. Above 6,300, we should see a bounce coming in. If I look at the longer term charts, shaky. But yeah, I think the bounce is not yet over. We have headroom till 6,600, Nickey.
All right, in terms of advance and declines, the market breadth pretty much remains in the favor of advances right now. 27 advances as compared to 23 declines. But overall, we've seen some amount of participation coming in from auto names. Mr. Kapadia, I'm just going to touch base on Reliance. What do you think could be the potential levels coming in on that one? Doesn't seem to be quite supporting the market right now. Do you think a participation from, of course, an index heavyweight could turn around situation? What do you make out of it? What are the RSI levels for this one?
I absolutely agree with you, Nickey. I think Reliance, frankly speaking, it's not a stock, it's a sector in itself. It's humongous, massive. In terms of sentiment, market weightage, and index weightage. So sentiment-wise was also, one gets the feeling that Reliance is oversold. At least if I look at the 60-minute charts, I believe it's trying to turn around. And if it does that, I think that will provide ammunition to the Nifty to go to 17,600. I think Reliance can and probably will turn the Nifty around either today or tomorrow. I think it's just around the corner.
When you say it's around the corner, what is the support level that we can look at for this one?
Okay, if you're looking at Reliance in terms of support, if you're looking at an intraday support, it's 2350. If you're looking at a positional support, then it comes in at 2313 and 2293.
All right, also let's address the top losers, JSW Steel, Hindalco. These are some of the counters which are languishing just at the bottom. What do you make out of it? Do you think commodity, little recovery that we saw was probably short-lived? And, probably the fundamentals remain weak for this counter even after the China reopening. What are the charts suggesting right now for these ones?
Nickey, frankly speaking, the dollar index has bottomed out. Okay, we've seen a small cool off coming in. But the dollar index has made a bottom, and I believe with some hits and misses, we should be going to 107.50. Now, if the dollar index goes up, equities and gold goes down. Equities and crude goes down. So, frankly speaking, Hindalco, whether it's Tata Steel, Vedanta. Okay, coming back to Hindalco, I think it's the weakest of the lot. But after a fall from 505 almost to 400, one would have expected a recovery to 440, which still hasn't happened. 406 was support and we're sort of hanging on to it for dear life. But no, if I take a slightly 231 point of view, Nikki, the setup is not good. And we seem to have peaked out for the time being. In case of any recovery with the market, isn't going to sustain. It might be a 2-week recovery, but net it's going to be a recovery and not a rally.
Right, Mr. Kapadia, apart from banks, we are also seeing some amount of support being lent in, or probably the sectoral gainers that I'm checking in, Nifty Reality Index, that also seems to be doing well. We're seeing, almost 0.5% gains coming in on that one. Previous brokerage's report had suggested that these stocks have underperformed quite a bit and were trading below their long-term averages. What do you make out of it? Anything that looks interesting overall from the Nifty Reality basket?
The Nifty Realty basket gave an upward bar reversal. The sector itself. Coming back to individual stocks, normally you would expect either a Oberoi Realty and DLF to do well. But I think Godrej has been deeply oversold. I believe it's given an upward key reversal yesterday. So that's where one can expect some sort of action to come in. And even Oberoi Realty. Oberoi Realty is better placed than Godrej. Godrej has a closer stop loss, but I believe Oberoi can do better.
All right, so Oberoi Realty is clearly the stock pick that you have overall on the realty index overall. But what do you make out of most of the cement stocks and also the hotel sector? What do you make out of it? We've seen EIH, Indian Hotels, all of these companies, probably there was a huge chatter around that, with a slew of events which are now coming in, these companies and the tariff rates, room tariff rates going significantly higher. These could be some of the counters which probably will indicate sharp upside. What do you make out of it, and what looks attractive in that space for you?
Well, frankly speaking, I think Indian Hotels stands out from the entire pack. We've been corrective, but it hasn't gone down much. We've had a phenomenal move, but the retracement hasn't been deep. Everything seems to suggest that the undercurrent is solid. 305, 295 are support levels. I don't believe that would get breached. Once it doesn't and we close about 325, we'd see further upside coming in. So whether it's East India Hotels or whether it's Lemon Tree, I think Indian Hotels looks positively interesting. But this is a slightly short to medium term point of view, Nikki. If things have to improve from a from a monthly chart, then we've walked into 347 twice as far as Indian Hotels is concerned over the last 6 months. So if you're going to see a significant move, then 347 needs to be taken out. But I know that's very far away for the time being.
All right, Mr. Kapadia, what does your strategy now change with the Bank Nifty, given that it's open on a positive note? You think that could, of course, give out some recovery coming in for Nifty index right now, or you think it's too early of a call to make?
No, I agree. I think till Reliance does its bit, banks will and could drive the Nifty and push it higher. You see HDFC, that looks interesting. You have ICICI Bank, and yes, I believe that banks could push Nifty higher till Reliance. 4,500, we are at 43.65, Nikki. I think we see some more momentum as far as Bank Nifty is concerned above 40,500. Then we see slightly more movement coming in. That would obviously reflect positively on the Nifty itself.
All right, we've spoken enough and more when it comes to the Bank Nifty, Nifty Reality. Any particular basket and stock, Mr. Kapadia, that you think is really at the point where we are looking at that breakout level, probably in the oversold territory, has a good, huge potential in a bearish market like this?
Okay, there is something like an ICICI Lombard, which is deeply oversold. I think that can surprise on the upside. You have Abbott Lab, which is in an uptrend but is correcting, so that can give you an opportunity. Even Alchem is in a consolidation phase on the daily chart. Say if you have a view for the entire month for the March series, I think Alchem is something which you can consider. And if you're in a risk-taking mode, I believe ACC is deeply oversold. Downside does appear limited. So maybe once again, this is a high risk trade. So even that can be considered in a situation like this.
Right, so ACC Ambuja is also on your preferable list, but what about Kotak Bank and SBI Life? We're seeing, probably SBI Life doing too well. Kotak Bank seems to be doing well. We're seeing some amount of traction, of course, being lent out by these players as well. What do you make out of it? And something also like Britannia. Britannia, we're seeing gains coming in to an extent of 0.3%. Do you think we can see further upside on this one?
I'll start with Kotak. Nickey. Kotak has underperformed over the last couple of years. If you look at the history over the last 20 years or more, you have Kotak Bank and HDFC Bank leading the pack. Public sector banks were nowhere in the fray. It's only Kotak, HDFC, and then you have the ICICIs and the Axis and everything else. But this time around, State Bank posted a new high, ICICI Bank posted a high, Axis Bank posted a high, but Kotak didn't and HDFC Bank did. So, I mean, there's been some sort of a probably shifting of portfolios, but extreme near term, rock solid support at 1684 as far as Kotak is concerned. A bounce seems to be around the corner. Up till now, it's flattered to deceive. Whenever we've seen technical positives, it hasn't held out. Once again, it looks a bit positive, but 1783 is important. I mean, that needs to get taken out to see something significant from a medium-term point of view. Coming back to Britannia, we've gone down one way for almost, 18 trading sessions in a row. But yes, beautiful move, 3100 to 4650. Is tired, posted a fresh all-time high. Downside appears limited in the near term. A bounce could be around the corner, but I believe it is retracing the last rise. So I believe this correction could take some time to play out, and it might not be a one-way move. It could be up and down before it stages a significant bounce back.
All right, Mr. Kapadia, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, it's that time of the show where we get in a fundamental discussion. Of course, joining us for that is Nischal Maheshwari, who's the CEO of Centrum Institutional Equities. Good morning there. What do you think out of the entire auto stocks? Because they've been the top gainers. Do you think there is a further fuel to this rally?
So my view on autos remain to be a bit negative actually. So yeah, maybe in the short term basis you might see a rally given that the whole market is down and you might see some respite there. But on a broader sense, basically, if you look at it fundamentally, I think Bajaj Auto has already highlighted saying that they are having a problem on the export front. And as the interest rate remain higher for longer, which is my thought process basically, even in India and across the world. Basically, I believe all the borrowing companies, all the companies basically which are selling vehicles on loan, obviously they will suffer. So all CV, PV, definitely, I think to an extent even in the two-wheelers. So that's a longer or a medium-term call, basically, which we have in autos.
What do you make out of the hotel stocks? We've been discussing about, with our technical guest some time back, where he suggested that Indian hotels probably looks as an attractive bet as compared to the rest of the peers, at least when it comes to the technicals. How do you look at this space? How do you approach this space fundamentally? Because you think a couple of events being lined up, right? You have the G20 summit. Apart from that, you have room tariff rates which have been going higher. What do you make out of it? Do you think the space is attractive overall, given the valuation perspective?
So valuation, I think they have run quite a bit basically in the current year. So valuation you may not be very comfortable with, but fundamentally I think the space seems to be in a good place. Surprisingly, I was hearing the interview of Indian Hotel CMD yesterday, and he was saying basically world over and that too in India, basically this time it is being led by leisure and not business. Actually, I think this is the change which we've seen happening post-COVID, where I think the business travel has definitely come down, and you are seeing people actually taking more leisure time out, basically. And I continue to believe that this will at least continue for a year. So I think hotel is in a good space at the moment. We have, in the last 2 or 3 years, we've not seen any big capacity getting added. So I continue to believe that the ARRs will continue to remain buoyant for the industry.
All right, and within that space, any particular pick that you have that you like, given the valuation and the earning potential?
So we don't have hotels under coverage, so no particular stock basically. But I think Indian Hotel remains to be the market favorite.
All right, Nischal, let's also talk about, the whole IPO segment right now. Fab India has recently withdrawn its planned IPO, citing weak market condition. The garment retailer says it had a bumper year. There was a 40% growth in business. You think there are going to be more of the companies which would delay their plans now, given that the market situation still aren't looking that great?
So in the IPO market, I think two things have happened basically. One is obviously last year it was a very, very buoyant market. A year before last, and last year was okay kind of market. But as most of the companies go through a process of coming to the market, it takes 1.5 year. So I think most of them still have that lofty valuations in mind. So I think the promoters of most of these companies are not willing to come down and say, okay, we want to go ahead and do this issue, maybe at a lower level. So I think that is the mismatch of expectation, I think, is a bigger issue basically in the market for the issues not to go through. Otherwise, also basically given that this year there has been markets are down, so more people are looking, saying that we already have a lot of stocks in our portfolio. Those stocks are down quite a bit. Shouldn't we be looking them and adding that rather than actually adding another new name into the portfolio? So I think these are the two things basically which are keeping the IPO markets a bit subdued at the moment.
Right, Nischal. Also, now let's discuss about the harsh summer probably is an offing, right? So let's discuss themes related to that. What are the sectors that you're keeping an eye out on? Of course, do you think an harsh summer can change the long-term story of AC sales? Typically, we've seen Voltas outperforming most of its counterparts in this season. Do you think the story is going to be any different this time around?
So the story, I think, obviously, I think a strong summer is going to have positive impacts on the AC guys, on the refrigerator guys, and the cooler guys. So I think these are 2 or 3 segments definitely which will have a positive impact upon. Now we have to look at it saying that this whole sector, especially the AC sector, has been having severe competition. Actually, there are a lot of new players out there which are actually impacting the margins across. So I'm saying that's a very, very strong market share fight going on into the system. So that is what our worry remains to be. Yes, the whole sector will see good, but I believe that margins will still will continue to remain under pressure. And that is my worry basically as far as AC is concerned. Refrigerators, yes, I think there are a limited number of players out there, and that will do well. So the cooler sector also. But ACs, we are worried a bit.
Sure. Would you pin down a name to the worried sector right now, just to understand? Probably there couldn't be any upside that we could see here on. Just what's there on your list right now?
So Voltas is one basically name we are worried about because we see Havells along with its brand, which is there's a brand of Havells basically which is coming very, very strongly and has been cutting prices across. So I think that brand is going to. So I think Voltas will have to take a price cut if they want to continue to maintain their margins, want to maintain their market share. So I think that's an issue basically which I see at the moment. So that's where so Voltas we are a bit we have a reduce on Voltas, whereas we like Blue Star in that whole AC segment.
Right. Just a quick analysis coming in for Voltas right now. Do remember the fact that the company is debt-free and has been maintaining a healthy dividend payout, but at the same time on the flip side, we have the company not delivering good in terms of the sales growth and also the return on equity. But then, Nischal, I'm just going to come back to you and ask you about Vedanta and the bunch of commodity basket. What do you think about it? The next few weeks will be at least crucial for fundraising by Vedanta, because if it fails, the issuer B rating credit rating, which is already deep in the junk bond category, could come under further pressure. What do you make out of this development?
So I've not been following this basically, so little for me to add out there. But I think the whole commodity basket per se, basically, we are negative, given that the outlook on the international markets continue to remain subdued. Most likely, the interest rate remain higher for longer. Then I think the two consuming baskets of the world, both US and Europe, will definitely head for a recession, and growth across the world would be subdued. So I think commodities as a basket we are negative, but I have not followed this on Vedanta, so I do not have much comments to make on that.
All right, overall negative view coming in for the entire commodity space. But Nischal, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you a lot.
Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen for rest of the updates. Stay tuned into moneycontrol.com and Moneycontrol app.